Hello, everybody. It's gonna be a very long class. I mean, not a very long class. It's gonna be a very dense class. So, I'm hoping that it's helpful for people.
Yeah, I'm
Yeah.
also hoping that.
Yeah.
We're hoping.
uh,
Together, we hope.
Together we hope. I'm gonna wait a couple more minutes for people to get in, and then we can start. I know that I started talking about finances kind of in the in my business or career class, the one that I didn't know how to name.
Yeah,
Yeah. But
we're going to continue talking about them.
we're going to continue talking about them. Well, I sort of like had to rush at some point, so yeah.
That's not going to happen today, though.
It's not going to happen today. Okay, I was making sure. I couldn't remember. My brain doesn't work great this week. But I wanted to make sure that I made a Patreon link. And I did. I made a Patreon blast. Couldn't remember if I had done that. Oh. It's okay. We'll get through it. I tried to cover a lot of bases to get, to make it worth it.
Let me work it.
Let Nathan work it. Jacob apparently set up everything for me. Also,
That's
if you
nice.
haven't seen, there's new merch in the store.
Whoa.
Go check
Speaking
out
of
my new
finances,
merch. Speaking of finances,
help. Buy our merch.
yeah, help.
Help.
Buy the merch. Karina made a very good animation about it, so.
Yes. So good.
All right.
You could watch that. You could click away from this and watch that. It takes like a minute and a half tops.
Should I wait 1 minute?
Yeah, wait 1 minute. Everybody should watch.
And then I'll start the class. I'll wait till everyone's done. Oliver, are you gonna go watch? She's not even looking at me. She's looking out the window. That's okay.
That's okay.
That's all right. She'll watch it later. We'll make her.
She'll watch it later probably. She'll
She's
pay
one
attention.
of the producers, so she kind of has to. It's part of her job.
Yeah, after we post it. Just like, I actually have some notes.
Yeah.
Could you make Nathan's butt even bigger?
Even more caked up, please?
It's so funny. Karina did such a good job.
Yeah, it's very funny. I also brought many a beverage because there's going to be much to say in this class.
Oh yeah, you gotta sip.
Gotta sip.
Gotta take your sips.
Gotta sip.
Everybody, grab a bev.
Grab a pen, grab a notebook. Let's go.
Yeah. Okay.
All right. Should we get into it?
Let's do it.
Let's do it.
Let's learn.
Let's learn about money stuff. I have to first share with you, Nathan.
Me?
The class.
Share with me.
Also, this class is so dense that it's not stylized.
just floating there.
Yeah.
Oh man.
Remember how in the business class I did like a Evangelion theme?
It was very good.
There's no theme for this one because I'm tired and it's a lot of information.
That feeling when capitalism.
Yeah. So here's the title of this draw class. It's money stuff.
Money stuff.
Title subject to change when it gets posted in order to get maybe some clicks. But money stuff.
Money stuff.
I had started to make this presentation somewhere in the middle because I had taken screenshots of things that I was looking at and I was throwing them in, and then I just like turned them into slides. And I had a much different idea when I started this class than where I wound up. Where I wound up is this. You'll see 2 slides in the middle that are completely different style, and I didn't want to change them.
That's great. I'm excited. That's how we'll know we've made it to the middle.
Yeah. Exactly.
Very good.
The middle of the presentation.
Yeah.
Okay, so some disclaimers here. Of course, I am not trained in finance. I am an art major. I'm an art major, but I had to really quickly learn about finance things because that's what I do for the company. That's part of my job for the company, is that I handle our finances.
Yeah.
And so I started to look into a lot of options because I wanted to figure out the best options for us and things like that. And
we haven't gone bankrupt yet.
We haven't gone bankrupt yet. It's great. Thank you, patrons, for that one.
Thank you, patrons.
But basically, I don't want to tell you what you should be doing with your money. That is your choice. It depends on your lifestyle, your goals, your, it basically depends on a lot of different factors. But so I can't tell you what to do with your money or where to put it. So basically, I'm going to try to teach you terms and how certain things work, and then you can decide for yourself what works for you in certain situations.
I'll tell you what to do with your money.
Yeah.
If you want someone to tell you what to do with your money, I'll tell you.
Oh, okay.
Send me a message. I'll let you know.
Go to or you could go to a finance expert.
No.
Oh, okay.
No, yeah, you should. I'm just here to be silly. Don't listen to anything I say ever.
Also because we don't want to be sued.
No.
So please, before acting on anything that you see in this class, go talk to an expert. Okay. So the most important thing to know about money to me is that being poor or being low on funds is not something to feel shame about. It happens to most all of us. And the only people who want you to feel shame about being low on funds are people that benefit from you staying low on funds. My cat almost just fell off my chair. The most important tool you have, the best tool you have to better financial stability, is to know how much money you have at all times, because banks, credit cards, all these institutions make money off of you not knowing how much money you have and overspending, right? So banks will make money from you. I mean, we'll go over all this later, but like banks will make money off of you pulling more than you have out of the bank. So then they're going to put a fee on you, and then, yada, yada. So know how much you have. Olive, I need you to go away. You can go into the second chair. You need to know how much you have and not feel shame about it. Just use it to empower yourself, basically. And I know that's difficult. I grew up very poor. It's stressful as hell, but what's more stressful is owing more money because you didn't look that one time.
Yeah. You keep I gotta do one thing. Hold on.
Okay, go for it. So things we're gonna go over in this class in order is banking, like types of bank accounts, terms you should know, how inflation works. I think I spelled that wrong. I'm gonna have a lot of spelling errors in this because I lost my mind. Inflation, and I'm going to try to go over most of these things in the US, the UK, Canada, and Australia. Of course, I know the US the best, but I did try to find out about the systems in UK, Canada, and Australia in terms you should be looking out for. we're gonna then go over like how to plan your money, how credit cards work, investing, and the principles behind that, and types of funds that you have in whatever country you're in. Information about recessions, because I think that you hear recession and you're like, I'm gonna die. And they're stressful, but you know how you can plan for it and what it actually means. You know, how to price your work, and then I put recourses. I meant to write resources when you're low on cash in the US, Canada, UK, and Australia. Resources. I'm so bad at spelling, especially when I'm tired. So, banking. I went over this in the career class, but I want to go over it again because I think it's really important. In the US, the rate of inflation is 3 to 4% every year, and the average interest for a US savings account is 0.42%. And that means that is including higher yield savings accounts and regular savings accounts, which again, we'll go over in a moment of what that means. So actually, if you just open like a regular savings account through a bank in the US, odds are your returns are like 0.01%. And that's how much you're going to be earning on whatever money you save in that bank, which is nothing. So you need basically to be keeping up with the rate of inflation, which is like, you know, you don't have so much control over this, but like what you get paid at work, you should be getting a 3 to 4% bonus to be keeping up with the rate of inflation. You should be getting that every year. But there are other options for you to try and make up that difference. So I have an example here. And again, I'm going to go over all of these terms in a moment. But if you have $10K in the bank for 5 years with the US average savings account, APY, which is how much you earn in a year in your bank account, you will have $10,212. $10,000 after 5 years of US actual inflation is $12,166.53. That's how much you would need to have in order to equate what was $10,000 5 years ago. So you always got to be moving up. I also have some numbers for everyone in the UK, Canada, and Australia. Again, tried my best to find out information, but I'm American, so, you know, I did a lot of research this week. It was a jam-packed week. I've learned a lot, but I'm still not an expert. Anyway, the rate of inflation in the UK is averaged to be 2.82% every year. Earlier this year, I think, or was it last year? It was like fairly recently that your inflation went up to 11%. It like skyrocketed. Wow.
That's big.
It is big. But to be fair, US inflation was around 2.8 for a while until it jumped up to 4. So we're kind of, there was a big uptick for a little bit. So everyone got that uptick. So UK inflation right now is going down, but it's still, I think you're at like 4% or something, but the average is, 2.82 every year. Also, the UK gives better rates typically on a savings account. It's easier to find those options. Olive, I'm going to put you in the trash.
No, don't put Olive in the trash.
You sit here. Sit here. What if I put a blanket on it? Would you be more enticed? Anyway, in the UK, it's easier to get a savings account that gives you better rates. I don't want you in my lap is the thing. Sit here.
But she wants to be in your lap.
Yeah, she does. All right, she's in
an
the chair.
Impasse. Okay, so the and again, I will go over all of these more later. For Canada, it's 3.15% every year. Recently, it's been up to 3.80. The average, from what I could see, I was opening like a bunch of websites to see like, you know, like the main, like HSBC and stuff like that, like the main banks of Canada, like the most common banks. And I was looking to see what their rates were, and it seemed to be around here. And Australia, it seems to be between 2 and 3%. It was recently 6.59%. And the average interest for the savings accounts seemed to be around 1.31%. And again, we will go over all of these terms in a moment. So, terms, banking terms that you are going to see when you open up a bank account, or when you're looking at bank accounts to open. But basically, and again, I went over some of this in the previous like career class, but the FDIC, or the Canadian equivalent is CDIC, or in the UK it's FSCS or EDIS. You can see it right here on the page.
Oh yeah, that's what the one guy from the anime government episode, Adam Conover, told us about, right? Did you work for the...
Yes, I believe so.
Yeah.
Sorry, I'm trying to change like the ratio of this because it's gotten real weird, but I can't. What if I do this? Well, then I can't see the... All right, well, we're just going to deal with it. Yeah, can't see the layers. Anyway, if you open a bank account, you should make sure that your bank is insured by one of these branches, depending on what country you're in. In the US, it will be the FDIC. I have to turn Olive around because she's licking her cone and it's making like a horrible noise towards the microphone.
Nice.
There she goes. But basically in the US, if your bank folds, the government will reimburse you. Like if it goes bankrupt and then they close, you could see that in a bit ago, there was that Silicon Valley Bank or whatever that shut down, and then people were panicking because that was not FDIC insured. So people just lost all the money that they had in those banks. It was for a lot of startups and things. So you want to make sure that it's FDIC insured. Most of the most common ones are insured, like Chase and Citibank and all that stuff. Just make sure that it says FDIC insured at the bottom. Again, I'll show you what that looks like later. But basically you will get back, if you have $250,000 in that bank account in the US, you will get that money back from the government if that bank shuts down, right, and loses all its money. If you have more than that, you will still only get $250,000. Even if you have like multiple bank accounts in there, it's like under your name. So if you have 3 bank accounts and those 3 bank accounts are in one bank, let's say like Bank of America, and you have in total between those 3 banks like $300,000, you're only going to get $250,000 back. So it's usually good practice to like move to a different bank if you have more, because then you're not putting all your eggs in one basket. Anyway, that's less important. Just make sure that it's FDIC insured or insured by one of these. APR is your annual percentage rate. It's usually used in the context of loans and mortgages, represents the yearly rate charged for borrowing money, including fees. Doesn't include compounding things. So compounding means like, so you have this thing called a principal, and the principal, when you take out a loan on principal, it's like, or when you take out a loan and then there's the interest rate that applies to the original amount that you took out, like $100,000, they will charge interest on the principal. For compounding, it means like if you have $100,000 and then you've earned enough to get $5,000, then you're not earning like interest or whatever on the $105,000. You're only earning it on the original lump sum. APY is the amount of money you gain from keeping your money in an account in a year. So you'll see, and again, I have an example of this later, you'll see that sometimes you have 2 numbers, especially in a high yield savings account, where you have the amount of interest you'll get and the amount of APY. And the APY can be like 5%, and the interest can be, it's usually slightly lower. It's like 4.957 or something. And that means that every month you're going to be earning that interest. But if you keep it for a year, when that account becomes a year old, you've earned the compounding rate, which is the APY. So you're going to earn a little bit more. And I'll go into like an example of this later. The interest is just what I said, the amount of money added to a total, for better or for worse. Again, we'll get into that in a second. Accrued interest is the interest earned but not paid. So they'll say like you've earned X amount of interest, but it's not in your bank account yet. Your overdraft fee is a fee that happens when you take money from your account that you don't have. So if you have like $10 left in your bank account and you pull 20, that means you're negative $10. And now the bank is going to charge you an overdraft fee depending on the rules of that bank. So you need to look into those when you sign up for your bank. Your routing number is tied into like your wire transfers. This is a number tied to your bank or your CD or whatever that allows people to wire you money. They will ask for the routing number if you get a wire transfer. And a wire transfer is a way to send money through a bank without sending physical check or cash or something. You can do this online or at your bank. There's usually a fee. I think the most common is like $15 or $25. So just beware of that when you send a wire transfer or receive a wire transfer, because you also have a fee for receiving wire transfers usually. Again, depends on your bank. It usually takes 1 to 3 days to clear. Then you have the minimum balance, which is the lowest amount of money you're allowed to have in said account without getting hit with penalty. So sometimes if you open a bank account, they want you to have for sure, say $100. So if you dip lower than that, there will be a fee specific to that as opposed to like an overdraft, where if you have like 100 and you spend, if you have like a overdraft, if you have a minimum balance of $100 and you dip below like $50 from that minimum balance, there's usually a grace period. Some banks will have like 3 months. Some of them will have like a couple of days, blah, blah, blah. But if you are below that minimum balance beyond that grace period, you will be hit with a fee for that. But then if you dip below that and the overdraft, which is 0, you get hit with both of those things. Or you can, again, depending on the bank, you have to look at all of like the fees. And again, I'll go over how to look at fees and things like that for your bank. Limited transactions. That means the amount of transactions, which means like withdrawing money usually, that you can do with said account. So some, especially like high yield savings accounts, will say you can only do like 4 transactions a month. And that's what you're limited to. For like a CD, you can do 0 transactions. And I'll explain what a CD is in a moment. But I talked about interest versus APY. So this is like the difference that interest versus APY can do. So if you have a bank account that has 4.17% interest, and if you have $10,000 in said bank, that means you take 10,000, multiply it by 0.0417, and then that gives you, this is the amount of money you'll get in that bank account. But if you have 1 year in 4.17 APY, there's like this whole math thing. There's like an equation you can do, but basically it's like for the first month, you do 1/12 of the APY, which is, 1/12 of 4.17, and then you multiply that by the amount that you have. So you've earned $34.75, and that gets put into your 10K. Now, the next time you have 1/12 of 4.17, that's going to be multiplied by the interest that's already been deposited, which is your $10,034.75. So that means that you're going to be earning like a little bit more every single time, and that can really build up after a while. So you can see it's like not that much, but if you have the option, why not? That's just a little bit extra money.
And you're adding the you're adding the base amount back in just for Just
yeah.
for the
Yeah.
sticklers out there. 10,000 times 0.047 is not
Right.
it's 1 point. Oh, yeah.
Yeah. So
You get it.
It gets added on each time.
Yeah.
And that's what the APY is applying to, is that built up amount of money. So I wanted to note that for non-Americans, I was seeing this a lot when I was pulling up like bank accounts from the UK, is that you use AER, but it's basically the same thing. AER. So AER applies to your compounding interest. So just note that when you look it up and you're looking for the APOI, you're like, Julie lied to me. It's actually AER. I don't think there's a difference. Not from what I could see, but you might want to double check on that. Again, talk to a financial...
Double check everything.
Double check everything, please. It's money. I'm here to try and get you interested in doing more with your money, or like giving you a starting point so that you can go on and talk to an expert. Types of banks. I'm going to talk about types of banks, and then I'm going to talk about types of bank accounts. So you have a retail bank. Also, I only pulled things that I thought would be applicable to people taking this class. I'm not going to cover like, you know, banks that like bajillionaires would use, or, you know, whatever, like, because I don't think it's applicable, right? I got to save time somewhere. So retail banks, it's banks like a Citibank or a TD or a Chase or a Bank of America. They offer a lot of services like checking and savings accounts, mortgages, loans, credit cards. They basically want to be like the supermarket of money options for you. But in that, they might not have the best options for you personally. Like, they might be good for your day-to-day, but if you want something more specific, you might want to go to someone else. But they're usually the ones that offer like the most accessible bank accounts. So like, whatever, we'll go into it in a second. Credit unions. Credit unions are non-for-profit banks that work differently. They're basically, it works like a co-op. So the members buy a share of the bank, and then the money is pulled together to fund loans from that credit union. They have less services than banks usually, and less ATMs, but their interest rates are usually better. You can find some really good savings accounts with credit unions, or really good checking accounts with credit unions. It's just that you're not likely to find an ATM specific to your credit union elsewhere, like outside of your area, which means that you might get hit with like an ATM fee or something like that. So, there are online only banks, which is not like a type of bank that you go to or whatever. But if you're starting to look into more specific types of bank accounts, like that are higher yield, especially in the US, a lot of them are online only. So the nice thing about the online only ones, some of them, is that they offer better rates, but they don't have like ATMs, right? They don't have, you're not going to go across the world and find an ATM for that bank. You're going to have to use someone else's bank or whatever, and then you're just going to have to eat that ATM charge.
That's the sound of me eating the ATM charge.
So, type of bank accounts. Again, I have a whole section for everyone else after this, although I do start off with the one that's for everyone. Checking accounts, as it's known in the US, or checking accounts in Canada. Just spelled checking, but very fancy. Current account or a transaction account. This is the money that your debit card uses. It's your on-hand money. It usually has the worst returns out of all of the options I'm about to go over. So like the interest rates aren't as good. But debit cards, I realized I didn't explain what a debit card is, but a debit card is basically acts like cash in that it will pull money from your bank almost immediately. You'll see it like pending in your account. And then it might take a couple of days to clear, but it's the one that's going to be pulling money from your account the quickest, as opposed to like a credit card, which puts it all in a batch, and then you have to pay that off later, or you can do like a automatic paying is whatever. Debit card works essentially like cash. You just don't have to carry cash with you. A savings account. You put your money in here and you try not to touch it too much because a number of them have limited transactions to a point. Some of them might not have. I know that checking accounts in the US have basically no returns. Savings accounts in the US, my friend's account earns 0.01% interest.
Yeah.
So she gets like a couple of pennies every, so often, and it's bad. But it's your easiest to access money that isn't in your checking account. So a lot of people, I've seen it like recommended that you put like an emergency fund in there. We'll go over what an emergency fund is in a bit. Also in the UK, I think it's pretty similar to an easy access account, but it basically will earn you more than $0. But like, again, the con is that it doesn't give you that much. It gives you more than nothing, but it's still basically nothing. And the pro to it is that you can access it if you need it, like whenever you need it. A high yield savings account. This is an account that has higher returns on your money. The drawbacks tend to be that you don't have checking account options. You have to wire the money in and out of that account. And most of them don't have many or any brick and mortar locations. I was just mentioning the online bank only things. A lot of the high yield savings accounts, from what I could see, were online only. Again, I'll go over what it looks like in a moment. It has limited transactions, and the rates will drop. Basically, if like the country's rates on high yield savings accounts drops, yours will drop. You will earn less. It'll still probably be more than savings accounts because it's hard to go worse than 0.01% interest. But it can still like fluctuate. Whereas a CD account, you can put your money away. And again, I have examples of this later. You can put your money away for an agreed amount of time, and you are locked in at whatever interest rate, for better or for worse. So you could open a CD account that has a 5% APY for 12 months. And no matter what happens to the rates, whether they go up or they go down, you are locked in at that amount. So it's guaranteed what you're going to get at the end of that if you keep your money there and you don't touch it. There's some accounts that have like a penalty-free withdrawal CD, but then you earn like the penalty might be that all of that interest goes away and you go back to your principal. In the UK, you seem to have a similar equivalent from what I could see, which is a fixed rate savings account, or a FISA. FISA.
Suffice it to say.
Yeah, I have an example here. So, also something to note with CDs. In order to get, and again, I have examples of this later. In order to get like this APY, you might have to put in like a minimum amount in order to get that rate. I also want to talk about joint bank accounts. Joint bank accounts are a bank account that you open with someone else. It's just like you can do a checking account or a savings account or whatever with someone else. So you and the other person manage that money together. It's just basically that both of you can go in and see that money whenever you want, and both of you have access and can use that money, which is great if the person you're with is responsible, and you communicate and check about how much money you have in the joint account. Because sometimes you'll think, hey, I have $20 left in this account. I'm going to use it. I'm going to use $10 of it for whatever. But your person you're sharing that account with says, hey, I know we have $20. I'm going to use $15. And now you're going to get hit with an overdraft because, you didn't check or whatever, you know. People usually open these when they get married. Traditionally, they've done that. Also, traditionally, they've done that because women weren't allowed to have bank accounts. So they opened a joint bank account so that women could have access to money without asking their husbands for an allowance. A conversation I have with my French grandmother quite a bit. So you could, like, I was watching a whole PBS special on this, but basically it's like whatever works for you, do that. If it works for you to not have a joint bank account, that's great. If you have a joint bank account and you want to contribute like an amount of money or a percentage of money you earn every month into that joint bank account to pay for things that you are already paying for together, which just like takes out the finagling of like asking someone for rent every month or whatever. You can use it for rent and utilities and things like that. So whatever works for you, do it. Just make sure that if you're sharing something with someone, you communicate about how you're using the thing, right? A note about some bank accounts. Some bank accounts have a sign-on bonus. They can be really nice boosts depending on the situation. Some of them will have better interest rates up front and then dip later. So just check out, you know, what that time period is and what the rules are in order to get that sign-on bonus. But if you have a specific goal in mind, you might find an account at a certain bank that has a specific sign-on bonus that would work great for you, and then sometimes it's just not applicable. So a lot of credit cards will have a sign-on bonus, which I will go over sign-on bonuses for credit cards, or I will go over credit cards in general in a bit. Okay. I go into specifics in a moment, but in the UK, Canada, and Australia, you have some differences to our accounts. It's mostly what they're called. Also, it seems like all y'all's governments are more involved in banks than ours is. So,
Congrats.
well, kind of. There's a drawback. We'll go over that in a moment. Again, I am American. I'm American and French, but I know nothing about the French system other than my grandma complains about being taxed a hell of a lot because she's old. And they have a lot of elderly taxes out there. But before opening anything and before pulling the trigger on anything I'm about to talk about, please talk to a consultant in your area or at least your country, because I am not that. I'm neither an expert nor am I in your country. Anyway, the UK. And I might be going over things that like people know already because they might find it a little basic, but I want to start from like a ground level so that anyone who doesn't know anything from the beginning doesn't get lost in the weeds later, right? So, the UK has a system called the PSA. I believe this is in the UK, which is the Personal Savings Allowance. Is this the UK? I think it was the UK. Sometimes I confuse the UK and Canada.
Uh-oh.
But I'm pretty sure, but also my brain is mush today.
Great.
But I think this is for the UK. But again, you can Google it and find out.
It says UK at the top.
It does say UK at the top. You can...
According to this slide.
According to this slide that I made, it's for the UK. Anyway.
Yeah.
So in the UK, you have something called a personal savings allowance. And again, Google everything before like acting on anything or talk to an expert. You can earn an amount of interest over a financial year before you have to pay taxes on it. So you could earn up to like £1,000 a year and not have to pay tax on it, which seems bananas to me. That's pretty cool. So check to see what this rule is. Anyway, your current account is, like I said, it's like the checking account that I went over earlier. It allows you to receive payments, to take out cash, or use a debit card, transfer money, pay bills. It's basically your most easily accessible money that isn't physical cash in your hand. Apparently, you can borrow money from this account, but the overdraft daily interest is like 40% or something. I don't know. I'm going to mention that the UK system for a number of these things is the most baffling experience I've ever had to try and dig through, especially when it comes to credit cards. You'll see that I will be very confused. Anyway, your easy access account.
Well, they don't call them credit cards. They call them Lyft.
They call them Lyft?
I don't know. Let's just make it a joke. Keep going. Sorry.
I liked it. I was just taking a drink. Easy access account. It's a good place to put your emergency money if you don't need to move it around as much as your current account, but also you might need it at some point. Again, the interest rates on these things aren't as good. The regular savings accounts, I mentioned this earlier, but this is an account where if you make regular deposits, it's basically, I don't know, we don't have an equivalent to this, I don't think, in the US, but you can agree with the bank to make regular deposits. It's usually between a certain amount of money. It's like usually in a range. And if you put that away, if you agree to put that away every month, you earn better rates. But again, it has restrictions on the number of withdrawals you can have. But it seems to be like a pretty cool system. I know that the UK got very involved with banks and credit cards to encourage saving habits, which is cool unless you think about for a moment who's going to benefit the most and who's going to hurt the most from that, and then you realize that it doesn't really work. But if you could take advantage of it, it's great. We talked about this earlier, but fixed interest savings accounts, the FISA, really good rates. Usually you will basically agree like, hey, I'm going to put 20,000 pounds away into the CD at a rate of, let's say, 6%. That CD is going to earn a compounding interest, or APY or AER, 6% every, 6% at the end for that amount of money you put away. So you just can't touch it. It's just money you can't touch for however long you've agreed to lock it away for. And usually the rates are like 9 months, 11 months, 12 months, 15 months, stuff like that. So, yes.
Can't touch it.
Canada. Checking account. It's your everyday money, but debit card, blah, blah, blah.
I love the upside down text.
I started getting so tired of putting in like, please, I am not an expert. Please, I'm just trying to give you a place to start.
Yeah.
Checking account, like I said, debit card, easy access money, blah, blah, blah. Savings account. It's like the American savings account in a lot of ways. You can't move money around as freely because of limited withdrawals, but it has better interest rates than checking accounts, but it's still not the best. In a lot of countries, you can open, I don't know why I only put it for Canada, but in Canada, you can have a children's savings account. And in Canada, there's no minimum age requirement, and it can be used by a child. If you trust your child with money, it can have like a debit card, and I think it can have a debit card.
Do you trust your Canadian child?
Do you trust your Canadian child? Then, boy, oh boy, do I have an account for you. Also, a lot of countries have some sort of education plan. I think I go over some of them later, but you can, in Canada, you have something called a registered education savings plan. It's a long-term savings plan to help pay for a child's education after high school. So you can like open this when they're a wee little baby, and then you can contribute to it and it'll earn interest. And then withdrawals for it, I think, are like tax-free or lower taxed or something. I forget what like the draw is, but it's like a more effective, and you can only really use it for education. And then if you wind up not using it for education, because who knows if that child will go to school, you can take that money back, but there's usually a penalty. Business savings account. You can use one of these accounts for companies or like a self-employed. If you're a self-employed person and you work under like a company name, it's basically to keep your like finances more cleaning organized. That way you can just go to this business bank account and say like, you know, these are my expenses, this is my income, here you go, accountant, right? So it's easier. Hybrid bank accounts, which I thought was very interesting, that Canada has. It works like a checking account, but a savings account in one. It gets better interest rates than a checking account or with a traditional savings account, but it has the daily flexibility of a checking account. The downside is that they aren't offered by brick and mortar banks, so you won't find an ATM to draw money from, so you'll have to check to see what the ATM fee will be. And you'll have to like manage all of your money online. You can't like go to a physical location and like talk to someone to get help with what you're working on. High interest savings account. HISA. It's like a high yield savings account. Talked about it earlier. In the American section, basically it just earns really good rates and you can't move it around so much. Also, Canada has tax-free savings accounts. Again, please talk to an expert because I didn't really understand the following two things I was saying, but I was reading a lot of articles and I think I got the gist. But again, I'm not an expert and I'm not Canadian. It's a type of registered savings account. It's a government registered account where you can earn interest tax-free and you can withdraw money anytime. Usually used for big financial goals like a car, a wedding, a new home, etc. You have to be over 18. The annual limit is $6,000. Contributed to this thing. If you withdraw money from a HISA, which I think this is a type of HISA, your contribution limit can be refilled. So basically, like if you have $6,000 and you pull out 50, like you've already hit that cap of the 6,000, but since you withdrew like $50 from that, you can again contribute $50 to get back up to that cap. Not tax deductible. So your interest goes tax-free, but like the overall money you draw is not tax deductible. Or like sometimes with some of these accounts, you'll see that like money you contribute to the account counts against your income, so it's tax deductible. This is not one of these things. Anyway, registered retirement savings plan. It's another type of registered savings account used to save up for retirement, but you do not pay income taxes on your contributions. So that's, you know, a tax break right there. Or earnings while they're in the account. You can you'll pay tax on any of the money that comes out. You have to be working and you have to pay Canadian taxes in order to get it. Contributions are tax deductible. The limit is 18% of your income from the previous year. If you withdraw early, you can't make up the difference. So like I said with the previous one, if you have the $6,000 and you withdraw 50 and then you can replenish it, you can't do that here. So if you hit that contribution cap, you can't make that up. It's like, that's your contribution cap, right? You can contribute to it until you turn 71. Australia. Talk to an expert. Or Australia. Transaction account, which is sometimes I saw referred to as an everyday banking account, which is also referred to sometimes as a checking account for your everyday It's like the checking accounts that I had been going over earlier, where it's like your debit card is your on-hand money. Savings accounts, usually linked with your transaction account. Put your money here for higher interest, but not the best interest. But then you can get like a higher yield savings account. Term deposit is like an American CD account I mentioned earlier. You can lock away, again, let's say like $10,000 into an agreed upon time period, and you'll earn that agreed upon interest, that signed on interest rate, or APY, whatever. So your term deposit seems to work like an American CD. Offset savings account lowers the interest you pay on a home loan by offsetting the principal amount you borrowed to buy your house. So again, the principal is the original chunk of money, not like plus anything else. It's the original chunk of money you took out. I don't know anything about buying houses, but I thought I would mention this for anyone who's thinking about buying a house. Maybe look into one of these. I don't know. Student accounts. There's fee-free options and low-cost banking and free ATM withdrawals. Again, every other country has one that's like this. That's meant for students to put their money in the bank, and they're hoping that you'll just stay there forever. But it usually comes with benefits of being like fee, to a degree, fee-free, and lower monthly charges and things like that. But you have to check with every single bank account that you open what the terms and conditions are and what the fees are. And I will go over that again in a moment. Let's look at some bank account examples.
Gets me every time.
This is how I feel. I do think, like, the reason I'm doing this class and I'm trying to be so in depth with it is because this is all stuff I just didn't know. Like, no one taught me.
Yeah.
My mom worked at a bank, and she didn't teach me until after I asked her questions.
Yeah.
So it's just like
by design.
Yeah, it is by design.
Opaque and confusing. Yep. And
because banks make money off of you not knowing how much money you have and what the terms are.
Yeah.
They make all of the language very confusing so that you will mess up and owe them money. You'll fall into their trap. I don't want anyone to fall into traps.
No traps.
No traps.
Don't activate their trap card.
Don't activate their trap card. My parents were on SNAP benefits forever.
Yeah.
And, needed to get food from food banks and things like that. And I was like in college until my parents were finally out of that hole. And I think it shouldn't have been, I don't know. I think just like people don't know enough. And by design again. So
yeah.
I don't want anyone to be in that situation again. People will be in that situation, of course, and there's no shame in that. Things happen. But I want it to be easier. I want people to have knowledge, a starting point to go ahead and try and help that situation. Anyway, I picked out some banks at random. Wow, you super can't see this right now. Okay. I'll just zoom in a little bit. I'm sorry for moving the stuff around. So I pulled some bank accounts at random. These are regular savings accounts. Okay. So when I pulled up Bank of America, I went to today's rates. This is available just on their website. When I went to savings accounts, they had one savings account option, and it was the Advantage Savings. So I pulled it up, and it'll tell you what the balance you need is in order to get this APY. And this APY here is exactly the same as this one here. So there's no benefit.
It's nice that they they point out that
they're like, hey, if you have less than $2,500, you could earn 0.1% interest. But if you have more than that,
good news,
you can earn 0.01%. You can earn the same as the other one. It's fine. We're all in this together.
That's great. That's really good.
We're all in this together, except the rich people who are using a different bank.
Yeah.
Okay. This is a Chase one. Again, this is available just on their website, but I wanted to show you like what it would be looking like, right? I wanted to apply the things that we had gone over earlier to seeing it on the website.
Mm-hmm.
So this bank, certainly unlike this bank, gives you the same rate for all balances. No matter how much money you have in there, it will have a rate of 0.01%. And an APY of 0.01%. So it's exactly the same. You're not going to be earning like a ton of money on this thing. But this is what it's going to look like. So when I pulled up that first bank, I think it was Bank of America, right? I checked, you go into like more details. And the more details is this. You have to pay a monthly fee unless you do any of these things. And then it seems like the monthly fee is $8 a month to have this account, which can really add up.
Yeah.
So, you know, that's like, we're creeping on $100 to have this a bank account that's giving you nothing. Right. And also, this is not the minimum balance. This thing right here. This is the required opening deposit. So when you open this account, you have to immediately give them $100. And that $100 is going to sit in your bank account, but you're still handing that over. It's basically to like lock in the account. And then you have to maintain a minimum balance, which here is $500. Or you're going to be paying this monthly fee, right? Well, this is a minimum balance to not have to pay a monthly fee.
Yep.
So actually the minimum balance could be something else, but in order to avoid this like fee, you have to keep this amount. You could go into super more details. It's so small, we ain't gonna read it.
Oh my God.
So each bank will have fees depending on what you're trying to do with it. So this Bank of America, if you use a Bank of America ATM, you pay no fee to deposit, withdraw, do a transfer, or to check your balance. You don't have to pay them anything if you're using a Bank of America ATM. If you are using a non-Bank of America ATM, you have to pay them $250. $250.
250 cents.
250 cents, yeah. $2.50.
Yeah.
If you're outside the US, you have to pay them $5. And then there's like a bunch of ways that you can avoid it. It's basically like, give us a lot of money and you'll never have to pay the $2.50.
Right. That's you're paying them because ATMs also have a fee. So there's like,
yes,
here's the fee, but also there's going to be another fee. It's like, this is the fee we're taking, but hey,
yeah,
you might have to pay more.
Yeah, exactly.
That's not our fault. Shut up.
This bank, if you lose your card or something happens to it, or like someone steals your debit card and then they have to replace it, they'll replace it for free, except if you want a rush delivery, then you have to pay them $15. Again, unless you're like part of one of their like relationship tiers, but we're talking about like the most basic kind of account. Yeah. Then there's all of these fees. These aren't even all of the fees that are on this account. And this is pretty common. I'm not saying like that this account is like the worst. It's whatever, you know. It's not, I mean, you can get better interest rates, but it might suit your needs. It's fine. It's like, again, it depends on your situation, what you need it for, ATM availability, things like that. So if you have a lot of Bank of America ATMs wherever you are, this might be a good one to put some of your money in, especially like an emergency fund, right? So again, you can see all these fees on their website when you go. You just have to like keep clicking to see like fees and details, blah, blah, blah. They will have, typically every bank will have like a booklet or like a PDF explaining the very specific nuances. And you don't have to memorize each and every one of these, right? You just have to like, you should probably just be aware. If you don't think you're gonna pull too much out of your account, then like this whole section doesn't apply to you, right? Like, because you're not gonna have to pay an overdraft fee, because you're only gonna pay an overdraft fee if you pull too much money. So this is like one page. This is page 1 from the bank's book of fee explanations for this one specific bank account, which is like that Advantage Savings or whatever. So, you know, it's just good to check, especially if you're really tight on money and you don't want to owe more to people, right? To a bank account, like money you don't have or money you're not going to have. So you should check. Let's look at some bank accounts where the numbers are competitive and see how we can find options for ourselves. And again, I'm not telling you where to put your money. I'm not telling you what to do with your money. I'm just presenting you with information and examples so we can learn terms and apply them, right? Talk to an expert. Hey, we hit it.
Whoa!
We hit the slide.
We're in the middle. We've made it to the middle.
We've made it to the middle.
Wow, look at this.
Look at this. This isn't even the one that has all of the... You'll see it. There it is. Anyway. Bless you.
Excuse me.
So this is how I research options for myself. Is I will Google, because I'm very basic, I will be like, I want a high yield savings account. I'm going to Google it. I'm going to Google best high yield savings accounts. And usually what happens is NerdWallet pops up, and I like NerdWallet for myself because it presents options in a nice way. But usually every NerdWallet article like this is sponsored. So you have to look up for, or when you Google it, it'll say sponsored above, or it'll say standout online savings accounts from our partners.
Right.
Which is a sponsored thing. And that doesn't necessarily mean that it's bad, because again, it could be good for you and your situation. You just have to look at each account, right?
Yeah.
You know, you could pull up a non-sponsored article and compare it to this, or see what one's saying over the other. Or like, I feel like this is a good starting place so that you can be like, oh, Citizens Access Savings seems good for me. Why don't I pull up their website? Or why don't I pull up another article, or like 2 or 3 other articles to say like, this kind of looks good to me. What are these other websites that are reviewing it who aren't sponsored? Let's see what they say. And then, you know, go to their website, read all the terms, see if it works for you. If you're using the NerdWallet website, you can click here to see their review of the thing and why they reviewed it the way that they did. Or you can go to the institution's website by clicking the Learn More. It'll just bring you to their website. So, excuse me. So it will give you bullet points. And again, if they're sponsored, they're going to be highlighting like the best things. And then the con throw is going to be like, they're too much of a hard worker. You know, it's sort of like the interview question sort of thing, where it's like, they're presenting you with the very best in the best situations and like the best of the worst sort of things. But I feel like it's a good snapshot to be like, does this interest me? Does it not?
I love the bevel on that at a glance.
Thank you. I really wanted to do like a 90s PowerPoint presentation and do a lot of word art, and then I didn't.
You know what they say, the bevel is in the details.
Nathan?
Yeah.
I like it. I like it is the thing.
It's just for you, Julia.
Thank you. So anyway. So they will give, they can't lie to you. You know, they can't just say like, they'll give you $1,000 for signing up when they like don't, you know?
Right.
So I don't know. It's like a good place to start, and then cross-reference it with another article, or go directly to the source and see what they're actually offering for how much you intend to give, right? So if we're doing like a high yield savings account, some accounts require you to have a minimum deposit in order to earn like the better rates. I go over an account in a moment that does that. So just see like what your plan is, and then see if that bank or that account aligns with what your plan is. So when you go to the bank's website, this is what they'll show like up front in your face, like, look at how good this APY is. And then you notice. And then I'm on Jacob's computer had a fart over the weekend, and so it doesn't work anymore. Anyway,
Wow.
You'll notice the asterisk, and you're like, what does that mean? That means there's like a note there, and that note might be like explaining what APY means. It might be that in order to get that rate, you need to have a certain amount of money in there in order to get that rate, right? So let's again go over the chart here. And this is like their front page one, not you went into like the details, the fees and details and things like that. But this is what they say on their website. It's like you need to have a balance between a penny and $4,999.99 in order to get this interest rate, which then equates to, if you leave it in there for a year, this APY. So you're going to earn this month over month, but if you keep it in there for a year, you're going to actually earn this on your principal, right? Or you can put over 5,000 and get the exact same rate.
It's the same. I love it when they break it up and it's the same.
It's a really good prank. I don't know why they do it, but it's funny to me every time.
It's pretty good.
Oh, we're back.
Wow.
So here's a different bank, right? So another one I pulled up on NerdWallet, whatever. It's the Basque Interest Savings Account, right?
They just took the word bank and changed one letter.
They sure did, to make it hard for me to say. So
they should make a bank called Bamk Bank.
Bamk Bank. Well,
that's my idea. That's for free. Anybody can take that one.
The messed up thing, I think, is it in this one? No, it's in this one. My favorite is Citibank.
Oh, it's almost Citibank, but it's
almost Citibank, but it's Cit. It's really good.
Capital 2 Bank.
Yeah, it's like
Chase. They should make a Chase Bank with a
yeah.
Z. Yeah.
Exactly.
Yeah, these are all very good.
It's great. So I pulled up a different bank account.
Mm-hmm.
Basque Bank. It tells you can earn an APY of 5.10%, which is an awesome return for the most part in the US right now. It's not the best. It's not the best, but it's pretty good. So you can earn this over a year or this month over month. And then when you go to you click this little one, it explains annual percentage yields and interest rates are offered, blah, 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 blah. No minimum balance required and no monthly service charge. You should check, even if you see that, you should check the fees and details just to make sure, because you don't want to get caught out by that. This is what I was saying earlier. So this bank, this Basque Bank, on their website says that they are a member of FDIC. They have the FDIC logo. It says that they are insured up to $250,000, which I think is the rate they're allowed to do by the government. Because the government probably doesn't want to pay you $4 million for putting all your money into mom's mattress bank. And then that one closing and then being well, great, thanks. Now we owe you $4 million. Anyway, so again, make sure it's FDIC insured or whatever that equivalent was that we went over earlier. This is where I just started drawing lines.
There it is.
Here's one where the rates are very different. I cannot remember
which bank this is, but it's one of them that was on that list.
It's one of them.
It's one of them.
It's for sure one of them.
So when you go to the website, it has this like big old like platinum savings, 5.05% APY. On balances of $5,000 or more. And you're like, cool. Like, I got drawn in by this. Then I noticed this. Let's go see what it is if I have less than $5,000. Oh, it's 0.25% APY.
That's way less.
That's way less. Also, minimum deposit.
It's still better than, I don't know.
It is better than the 0.01% from like the regular savings and from most savings. So like, even if you don't have the 5,000 to get this huge amount, it is still more than like the regular savings. But again, these high yields, it's usually harder to get a bank that's like this accessible. But like if you have extra savings that aren't your emergency fund, it might be good to like stash it away in here so that it can start to grow a little bit more than like a penny, right? We'll take, if you can earn 2 pennies as opposed to 1 penny, you take the 2 pennies. Because over a year, those 2 pennies will build up, right? And over like 5 years, it'll build up a lot more. So do it if you can do it for yourself. So I pulled some CDs. I think this is on like Citibank or something. This was when I checked yesterday. So this is how a CD looks to some degree. Not exactly this UI. But you can get like a 9-month, an 11-month, or a 15-month at this bank. Again, I'm not 100% sure of which bank it is. But if you do 9-month fixed, you can do 4.30% APY. Or if you do the 11, you can get somewhere in this range. We'll go over that in a second. Or if you do the 15-month, you can do something right in this range. And that probably depends on like the amount of money you give them to put into that CD. Depends on like the rate. But, you know, still pretty good. Especially this one. Like, damn. But this, like, the reason that this APY is lower for like a 15-month, because you're like, I'm being inconvenienced more to earn less, is actually like, since it's compounding, you'll probably earn more eventually. Again, depending on how much you give them and what your financial goals are, kind of depends. But like the 11-month fix, if you give them over $100,000, you can earn that like big APY.
Yeah.
Right. If you give them below that, you'll still earn like a good APY. It just won't be that like huge number. That 9-month fix, it's like any amount that you give them will earn this, right? I didn't read like the nitty gritties, but this is what it seems like at a snapshot. Okay. On to the next number. Does anyone have any questions before I move on? I know there's not. This isn't a packed class, but if anyone has any questions, feel free to ask them at any time, and I'll do my best to answer them. Unless you're in a country where I have no idea how your money system works, then you're on your own. If not, maybe I'll just move on, and then if someone has a question, I'll go back to it.
Yeah,
we just got.
I'll keep an eye out for questions.
Thanks, Nathan. So, planning your money. How I like to think about it for myself is that I like to think about money in 4 different chunks. So I will prioritize it from I literally cannot live without this money to I'd like to have this thing to what do I really want for my long-term goal. So the first chunk, the most important chunk, again, to me, is my daily/monthly cost of living, which is my rent, my utilities. Like I need my rent to stay where I live. I need that. I need to live where I live. I mean, you know, if I live somewhere else, that's fine. But like I need money to pay for rent. I need money to pay for utilities. I need food. I need transportation. Back when I lived in the city, it was like a Metro card. Right now it's gas. And then any medications I need every month, right? I need all of those to be added together for my cost of living. I'll go into that in a moment. 2 is building an emergency fund. Olive, go to your chair. Go to your chair, buddy. Here. Doesn't that look cool? There she goes. Building an emergency fund. We'll talk about that in a moment. Fund money. Again, we'll talk about that and why I included it as a chunk. And your long-term goal money, which is like buying a house, buying a car, having a wedding, going on a trip, whatever. Oops. So, your cost of living. Like I said, to calculate this, you have to keep track of your bills. So, what you can do is that you can keep track of how much you're spending every month. Like your rent is usually the same, right?
Mm-hmm.
You can pull up like a Google Doc or a Google Sheet, and it's free. It's easy to just hit, you highlight all of that and you hit sum, and it can give you the amount of money that you pay every month. You have your rent. You can include all of like your utilities. You can include how much you spend on transportation, on food. Add that all up, get the average, and that will be your cost of living month to month. And you usually want that to be in like your debit account, because that's where you're going to be drawing money from. You're going to be paying food from your debit, usually, probably, unless you have like a credit card. It's the money you need the most readily, right?
Yeah.
So that is your cost of living. You have to pay this in order to keep the lifestyle you have right now, of like the mandatory things. These are the things that are the most important to you. Your emergency fund. You should set up an emergency fund as soon as possible. This will happen if you have an emergency. Like medical emergency, or your rent goes up, or you get evicted, or just something happens, like your apartment burns down, your house burns down, something like that. Like just something, lose your job, whatever. You suddenly need money. This is what your emergency fund is for, is so that you have this sort of buffer. To get this, it's hard because it kind of depends on like what you are comfortable with. So you need to calculate like 3 to 6 months is usually the recommended amount of time. It's 3 to 6 months worth of living expenses, which is your cost of living. That was that first thing that we mentioned. It's like, in order to keep doing all the things you have to have, medications, food, etc., you have to have this amount of money. And you want to be able to have enough time to, fix whatever thing happened, or to situate yourself from whatever happened. So if you lost your job, you might need a couple of months to find a new job. Or if you have a medical emergency and you're laid up, you want this buffer time, because emergencies happen. So you want to not be stressing about it if you're able to. So you want to calculate, or you want to save up 3 to 6 months worth of living expenses. I am someone who is terrified of not having enough money, because I grew up, again, super poor. So I don't want to be in that situation if I can help it. Scrounging for food isn't exactly the most fun. So I typically go for like 6 months if and when I can. Because also I've not had great medical history. So I like to have that buffer.
Yeah.
In case I wind up, at a doctor or something's happening.
Yeah.
Your aim is to not touch that emergency fund. You want to set that aside and not think about it. If you really think you're not going to touch that emergency fund, you can put it into like a high yield savings account. But remember, the transactions are limited, but it could earn you a chunk of money. So like we talked about before, having a bank account where it's $5,000 minimum. And if you have an emergency fund that's $6,000, you can be earning 5% on that $6,000 over that year. And so you just earned yourself $300. So that's $300 you can then either withdraw, or you can keep there to keep earning money.
Because again, the next year it's now going to, the APY is now going to apply to $6,300. So that's just like, that's just free money right there. Fun money. I was reading a whole article. Fun money. I was reading a whole article about the psychology of fun money and not allowing yourself to do anything fun. I mean, there's plenty of fun stuff that's free or cheap. So I'm not saying that fun money means something extravagant. It's like something that really makes you happy. Because if you are spending all your money just to survive, you're going to be feeling not the best. It's kind of the same psychology behind like binge diets. Like, I'm suddenly going to cut out all of this one thing. Usually the rebound is worse. So you're like, I didn't do anything fun all month and I'm feeling like cabin fever or stir crazy. I'm going to blow it on this thing. And you get the thing and you're like, oh, actually this was a really stupid thing to blow all my money on. So now you've spent money on something that doesn't make you as happy and cost you more. So, you know, do something that makes you happy, as long as it's not like you have to identify in yourself that you are doing too much and these things aren't making you happy. Like, if you're going out like every night and you come back and you're like, God, I wish I had, like, if you're more stressed the next day because you're like, God, I wish I had saved that money instead of like blowing it last night and I didn't even have fun, and you keep doing that, you should probably say, like, if you need to save money, you should probably say, like, I shouldn't be doing that. I should be saving it. Like, tell your friends that you can't do that night or whatever, you know? You have to be honest with yourself, but you have to be kind to yourself. I'm saying you should have fun, but you also shouldn't be like a party animal. And again, there's lots of cheap or free ways to have fun. So, you know, you can always look for one of those options if you're really like tight on cash. But remember to enjoy your life. Yeah. Have fun with it.
Yeah. Enjoy your life.
It doesn't have to be anything extravagant. If you're looking at like, if you're online shopping and you're like, oh, I kind of like this shirt and I love this shirt, I'll just get them both. Maybe go for the one that you absolutely love and not like the one that you're like, oh yeah, this is nice. You know, maybe cut that one out and limit yourself to the one that you are obsessed with, you know. You got to be your own Jiminy Cricket, I guess. Goal money.
Drawfee merch, perhaps. Exactly, Xandra Burt. Good. You said it. Not, I'm just reading what you. I was thinking about saying it, but you said it, so now I can.
Yes.
Yeah.
That new Drawfee horse pin.
Ooh. Going like hotcakes.
It is going like hotcakes.
People love it.
I bought this Deer Hunter shirt at the Deer Hunter concert the other day. Top tier, making me happy.
Top deer.
I was on the hunt for new merch.
Wow.
I was the hunter.
Good stuff.
Goal money. And then this is like the last priority in this list, which is like if you're aiming to buy a car that you don't need. Because again, if you like need a car because your car is bad or about to like, you know, die or whatever, maybe move that up the importance list because you do need that to live. You can throw whatever spare money you have into a high yield savings account so that it earns as much interest as possible to help that goal happen a little faster. That's just my recommendation. Of course, there's a million ways to earn more money on a thing like a CD or whatever. It's again, whatever works for you. I had someone ask me about retirement, how you should plan for retirement, and all of my reading on it, everyone kind of just goes, save money. Depends. Depends. So I don't really have like a concrete rule for you. There's a few ways people go about it. One rule of thumb for saving retirement is like try to put 10 to 15% of your pre-tax income, so like before they take the taxes out. But it like depends on where you live, how extravagant your lifestyle is, your life expectancy, stuff like that. Another way that's suggested is like you save 1 times your goal by 1 times your salary at 30, 3 times your salary at 40, 6 times your salary at 50, yada yada yada. It's all here. But again, it depends on your living situation. If you're someone who's living in a smaller house in a lower tax state who wants to chill at home after they retire, you will need less money than someone who wants to live an extravagant lifestyle in a state that's very expensive. And who wants to party all the time, you know? Like to be comfortable, like even if the lifestyles are like the same. In California, the average cost of comfortable retirement annually, $90,000 to spend. That's like taxes, transportation, because you know you have to drive everywhere. It's California. And then if you look at the life expectancy, it's about 80. So if you retire at 65, you need to plan for, you need $90,000 for each of those years. So you'll need $1,350,000. To be comfortable, that's including like some fun money apparently. I was using a website to calculate this who had some like suggested revenue or whatever, or savings. But in West Virginia, the average cost of living retirement or having a comfortable retirement is $61,200. If you retire at 65, the life expectancy in West Virginia is 73. So you'll need less than $500,000 in order to be comfortable. But again, if you're healthy, you're going to live longer, so you'll need more than that. If you're less healthy, you'll need less than that. If you retire later, if you retire earlier, if your house is expensive, yada yada yada. I'm sorry that that's like a bad answer, but it's the only one I got. Let's talk about credit cards. Credit cards.
Let's talk about credit cards.
Let's talk about credit cards because I think they are spooky. They're spooky if you are not careful with them.
And they want you to not be careful with them.
They want you to not be careful with them because
even more than banks, I feel like the credit cards are really like
they're super predatory.
That's how they make their money.
Yes, it is. And I get into some of those interest rates later, and holy Christ.
Yep.
Christ, they'll bleed you dry. And also, it's like, it depends on what you use the card for. The interest rates will be different. I'll get into that in a moment. It's like, if you are not responsible with money, it's probably not advised that you get a credit card. Like, if you are bad at limiting yourself, probably don't get a credit card because you'll just accrue a lot of interest and owe a lot of money, and then you'll be in a hole, right?
Or get one that you like never you like make one purchase and immediately pay it off, because that's a good way to like increase your credit score.
Oh yeah, I go over that in a moment, but like if you are someone who's like irresponsible with money,
yeah,
probably don't. Just because credit cards are just going to enable you.
It's a trap.
Yeah. Credit cards basically allow you to borrow money from a bank in order to pay off something. At the end of each month, you'll get a statement from the bank about how much you need to pay. So if you buy like $100 worth of goods, you'll need to pay the credit card balance at the end of the month, or the end of the billing cycle, which is $100. It's not exactly the end of the month because some of the billing cycles are like, you have to pay it on the 4th, because again, they're trying to make it as confusing as possible or as weird as possible so that you're not like, it's the end of the month. Oh, I don't owe money yet for the credit card. I'm going to wait a couple of days. Oh God. You know, they're trying to be as predatory as possible, but also you need credit. A thing we'll go over again.
Yep. They invented a number to
they sure
punish
did.
people for being poor in more, as if there weren't enough ways.
Yep. Well, they said like the credit score is to show how responsible you are, but like it doesn't necessarily mean that people who can't pay their credit
are less responsible. It might be that they're in a worse situation and absolutely need help. It's anyway, it's like a whole thing. So anyway, if you don't pay that balance off by the end of the billing cycle, you will owe them interest, and that interest depends on what you use the card for. So there will be a interest percentage for if you made a purchase, but there will also be interest percentage for that's different if you took money out using that credit card. And you can read all those terms and conditions for each specific card on the website. And let me tell you now, England, you've done baffled me with the credit card system, but we'll get into it in a moment. So credit cards...
Well, they don't call them credit cards.
What do they call them?
They call them lorries.
Yes!
They call them Hugh lorries. They call them Doctor Who lorry.
Yes.
They don't actually do that. I'm being silly. Thanks, Swap Peanut. Swap Peanut is just in chat to let me know that making good jokes. Thank you.
Yeah.
Thank you.
Excellent.
Appreciate you. Thanks for watching.
Beautiful.
Thanks for your support. Thanks for being a patron. I'm just making this class take longer. I apologize. Continue, Julia.
That's okay. Credit cards help you have a thing called a credit score. A credit score, like we said earlier, is a number based on your payment history for loans, credit cards, things like that. And it is checked to see if banks want to give you money for a bank or for a loan or a credit card. It's basically like you need a credit card to get a credit card, and it kind of sucks. But we'll get into how you can do that. There's like, you can get, especially if you're a student, you can get like 0 credit cards, and there's like a thing called a secure credit card, which is like you can give them like $100 and they'll hold that $100 ransom unless when you close that account, they'll give you the $100 back, and then that helps you build your credit. Or there's a thing called unsecured credit cards, but usually you need some sort of credit for that. Anyway, we'll get into that in a moment. If you don't, okay, we went over interest rates. If you don't pay the money that you spent on that credit card, if you don't pay that off by the end of the billing cycle, you will owe an exorbitant amount of money on interest. Jacob's mouse has turned off, and there it goes. Okay. Here are the benefits of a credit card. You can buy something big and pay it off in bits, kind of. So like if you get paid like weekly, so you don't have the money up front, you can like pay it off at the end or in chunks or whatever, however you want to do it. Also you can earn reward points. So like the American Express Gold card, which I use as an example later, will earn you like a certain amount of points that you can then spend on airplane tickets or hotel rooms or concert tickets or something like that. Like each like rewards points card will have its own system and will have like better or worse benefits and rewards and like things to spend your points on. But some of them will have like a sign-on bonus where it's like, we'll give you 60,000 points, and you're like, oh my god, that's a lot of points. And then you look at it and it's like, you can buy cereal. You're like, cool. But like you can check how good the point system is before you sign up. So like if you see the sign-on bonus is $60,000, you can see what like those points could get you before you even sign up. And then you can see like how much you need to spend in order to get a certain amount of points, and then you can plan it from there if you really want to like min-max a credit card, right? Here are the drawbacks on credit cards. The average interest rate of a credit card for purchases is 24.46%. That's a lot.
That's a lot.
You will owe a lot of money if you maintain a balance on that card that you owe them and you haven't paid off. You will owe that amount for that balance if you only use it for purchases, because again, pulling money out is a different percentage. Here's the other thing. I mentioned this earlier, but it's like really easy to just like use a credit card for whatever because it's not pulling money immediately out of your bank account like a debit card.
Tricks you.
It does trick you because you're like, this is tomorrow me's problem. And then tomorrow you're like, this is tomorrow me's problem. And then tomorrow you're like, oh God.
Uh-oh.
I have a lot of things I have to pay now.
Yep.
So if you think that you are not responsible enough with money in order to like limit yourself, or you think that like, you know, you won't check as much as maybe you should, then maybe you should avoid a credit card as much as possible, or get one and tell yourself that you are only allowed to use it for certain things. Like I know that a friend of mine has an American Express Gold card and he only uses it for Seamless and for weekly groceries, because you earn 4 times the points on an American Express Gold card for food.
Oh, you got to get the points.
You got to get the points because then he travels on that thing. He does like 1 trip a year and he uses the points for that.
Yeah.
You know?
Yeah. The only credit card I have on a automatic monthly pay the full balance.
Yes.
So I'm never carrying a balance on that card.
If you can avoid a balance, 100% avoid having a balance on a card.
Yeah.
Because there's no reason you should pay $250 to a credit card because you didn't check or they screwed you.
Yeah.
If you max out a card or if you miss payments for the card, your credit score will tank because then the bank's like, oh, we can't trust you with money. So we're going to tell other banks by this imaginary number, you know, and we'll tank it to the ground. It's baffling. Anyway, if you're responsible with the card, you can build really good credit. I go over specifics, I think, about what damages your credit in a moment. I'll go over that soon. You can use a credit card to withdraw money if you're really in a pinch, but usually the amount of interest on that is like higher. So if you don't immediately pay back the money you withdrew, you know, before the billing cycle ends, you will owe like more than this usually. So I wanted you to understand how credit card companies make money off of you and off of merchants, because then I feel like that teaches you what they want you to fail at doing so that they can earn money off of you, like how they'll obfuscate certain things so that they can earn money. Transaction fees, that's put on the merchant. That's why some stores don't accept like an American Express, and they don't accept a MasterCard or whatever. Interest payments, what I was saying about, you know, 24.46% or whatever that was. So if you don't pay by the end of the billing cycle, you'll have to pay this extra, and that's just free money that goes to the bank. Free money for the bank or the credit card company, not for you. That is significantly less money for you. Fees, some credit cards will have like an annual fee, like the American Express is like a $250 or something. But here are some terms you should know. Annual fee, again, I just went over it. The amount of money they'll charge you for having that card at all. They have welcome bonus / sign-on bonus, which is cards will often come with like a sign-on bonus. So like, again, you'll get like X amount of points if you sign up and you spend X amount of money within a certain amount of time. You'll get this amount of points, right? There was a credit card I was looking at. It was like you could earn 120,000 points if you spend $25,000 within 6 months. And I was like, what the hell is that?
The hell is this?
What the hell is this? But like, if you're gonna make a hefty purchase like a new computer, you could, and you have the money for it that you could pay off before the billing cycle, it might be worth to put it on a credit card. That gives you points for that sort of thing, because that's a lot of points. But again, for the love of God, pay things off before the end of the billing cycle. Yeah. Minimum due. Some cards will require that you pay a minimum. So if you
haven't paid off the whole thing by the billing cycle, by the end of the billing cycle, you will need to pay them at least this, or else you'll get hit with something else. In England, England went through a thing where credit cards were introduced, and then everyone was like, credit cards are great, I'm going to put everything on a credit card and not think about it. And then a lot of people went into debt over credit cards. So the British government was like, well, we need to discourage people from doing this. So they made the minimum balance 50% interest or something for a while, because they wanted to scare people from not making payments on a credit card and not like defaulting, because then like the government will have to make up that amount, and that leads to recessions. But again, that whatever, I can go on a whole tangent about how that kind of screws over people that need the help, but whatever. So here's a way to calculate the credit card interest using APR. This is your daily period rate. So like if you, I don't know, it's a whole thing. So the daily period rate is your average daily balance, which is like how much you carry day to day, divided by the APR that's on your card. That gives you the DPR, and then you times that by your billing cycle, by your daily balance, and then that will give you, pay your monthly balance if you can. It's wild. Credit cards, I'm so scared of them because people can dig themselves into a hole so fast.
Yeah. That is by design.
And it is by design. They're trying to take advantage.
It's what they want.
Yeah.
Yeah.
So here's how to find a credit card for you. And again, I'm not telling you what kind of cards to get or where to put your money. I'm just trying to tell you some options you can look for. Mm-hmm. Australians, or Australians, as I wrote, apparently. Australians and Canadians, your credit card systems work more or less like ours. In the UK, I have a special section just for you at the end because it is bananas.
Bananas.
So, this is advisable in general. Check your credit and your credit score. Credit score, we went over what it is earlier. In the US, you can check for this year, for the year 2023, you can check your credit report for free once a week. I think it's once a week. It's like once a week or once a month for free until the end of the year. And I recommend everyone do this because this is how you find out that your identity has been stolen. Unless you get a letter in the mail that says, hey, congratulations on your new bank account in Idaho. And you're like, I didn't make a new bank account in Idaho. And then that's how you find out that someone's stolen your identity. Your credit score, you need, some credit cards will require you have a credit score in between a certain range in order to get it, or like over a certain amount. But your credit report will tell you what cards you have in your name, what bank accounts you have in your name, what your credit score is. You can check your credit score by itself. Most bank accounts will have like a credit score thing, like Citibank has one. I think Bank of America has one. Things like that. They will have like a little section for credit reports or credit scores. And you can do that anytime. There was like a myth going around for a long time, which was that checking your credit report or checking your credit score will damage your credit score, which is not true anymore, because that is what's called a soft inquiry, and soft inquiries don't damage your credit score. Hard inquiries do, and that's when a bank account, when you open with like a new bank, sometimes they'll do a hard inquiry to see like how much you have. Or if you open with a credit card company, they will do a hard inquiry to make sure that you have enough money, or like to see how much money you have so that they can like, whatever, screw you later. It's interesting. But I cannot recommend enough checking your credit report at least once a year. I had a situation where I had to talk to a detective about this for someone else, and they said that it's like it's such a common crime right now is that people's identities get stolen, and then they just don't check their credit report because they think that it's going to damage their credit score. And then it like comes up in like a criminal investigation, and then the detectives have to be like, we know you're not involved in this, but it is under your name, and there's nothing we can do to fix your credit score. That's on you. Now you have to spend years rebuilding because one idiot or one asshole, like, you know, stole your identity, right? So check your credit report. It's really easy and it's free, and you can do it on Experian, TransUnion, or Equifax in the US. I don't know what it is in the other countries, I'm sorry. But check your credit report. I cannot say that enough. Things that'll hurt your credit. Checking your credit report, I said, doesn't hurt your credit. If you make a late payment, if you spend too much credit, which is putting too many purchases on a card, or like taking too much money out through your card, applying for a bunch of cards, having your credit limit lowered, which is when they'll like lower how much money you can spend on a card if you start missing payments because they're like, you're spending too much and you're not giving us enough money, which means that maybe you don't have the money. If you default on a loan, which is you don't make the required payments, or you're co-signed to an account that has missed or made late payments, which means if someone makes a bank account in your name, either it's like a joint account, which usually you're aware of, hopefully, or someone's stolen your identity. If they steal your identity and they've made a bank account in your name, or they've taken a credit card in your name, and they start just like tanking those cards, it will tank your credit score, even though it wasn't you, because all of these institutions think that it is you. So you should check your credit report. You should check your credit score. That's my rant. Things to think about. When you're looking for a card, think about why you want the credit card. Do you want it to build credit? Do you want it for the rewards? Or do you want one because you need the extra cash because you're low on funds, which means that you probably don't want to owe a bunch of money to a bank or to like a credit card company. So you want your interest to be low. There's options for all of those. There are cards for students. I went over this earlier a little bit. I talked about unsecured cards or secure cards. Secured cards are like you get if you don't have a credit score at all. Also, the thing about credit scores earlier, when I said that if you're on a joint account or if you're on an account, like if your name is on an account and that gets tanked, you could also be put on like a responsible person's credit report, like a parent, and that will count towards your credit score because you're like technically on that, right? So I know that some parents will open a credit card for themselves and then put their kids on the card so that that credit score counts towards them. But that's if you have responsible parents. If you don't have responsible parents, maybe don't. Or maybe request that you get pulled. Going back to this, secured cards are if you open a credit card and you put a deposit of a certain amount of money, sometimes they'll ask for like $100 and they'll say, great, we'll give you a credit card and we'll have a lower limit. If you close this account later and your credit's been great and you've been responsible and you've been paying your balance and all these things, we will give you this $100 back and you'll have a good credit score. There are also unsecured cards, but they usually require some sort of credit score. It can be lower. The thing about the student cards is that their limits are usually a little lower, but their interest rates are usually good or better than like they'll have less fees or their interest rates are better. You have to make sure what those interest rates are before you sign up for those cards. In the UK, you can get a student card if you're over 18, you've lived in the UK for at least 3 years, have a UK bank account, and are in a course that lasts at least 2 years. In Australia, you can get one if you're over 18, are an Australian citizen, permanent resident, or visa holder.
have an ID, like a license or passport, and you have proof of a recent payslip or tax return to prove your income. Because some places require that you earn an income and some places don't. In Canada, it depends on the province, it seems like. Like Quebec has its own rules. So like, I don't know. I was trying to read into each province and it was just too much. But most of them require that you're within 18 to 24. I think Quebec, it starts at 19, or Montreal or something. Like some place requires 19. Was it Halifax? I don't know, whatever.
Halifax?
Get to know the place we're
Where's
from.
we're from?
We're from Halifax.
We're from Halifax. The good.
It's really good. It's a good video.
Go watch that. Picnic Face? Is that the name of that?
I don't remember. The last time I saw it, it was like in high school.
I want to say Picnic Face.
Okay.
They did Power Thirst as well.
They did. Oh my god, I forgot about Power Thirst.
Yeah, some classic.
Yeah.
Vintage internet stuff. Vintage.
Early shitpost.
Yep.
Anyway, Canada. Basically check the rules for what it's like in your province. Most of them don't require a credit score, but some will ask for one over a certain amount. Oh, also the credit score numbers go from like 0 to 880 or something like that. I don't know. It's like, or 900. I'm not really sure. It's like the more points you have, the better.
Yeah, you want a big number.
You want a big number. You can look up what the range is because I forgot to write it down and I don't know it offhand. We went over these secured cards, so you can get a secured card if you're not a student, and you don't have any credit. This might be a good option for you. If you have shaky income and need a credit card in case of an emergency and are looking for some help and need a card that has lower interest, there's some credit cards that will have 0 APY for like a certain time period. You just have to see what that introductory time is because it can vary wildly from card to card. I saw one that was like 0 APY for 3 months, and then another card that was like 19 months or something. So like if you need the help, you can use one of these cards. They can also accept like a balance transfer. Some of them have like a 0 balance transfer fee, which means that if you have a credit card that you have a lot of interest on and a lot of money is put on that card, you can transfer it over to this 0 APY card. And some of them will have a 0 balance or $0 fee for that. So you won't owe them any money. They'll just take on the debt of that other credit card and the 0 APY will apply to it. So you won't accrue any additional interest. You'll still have to pay that interest, I think, from before. I'm not really sure. I've never done a balance transfer before because, like I said, terrified of credit cards. Rewards points. I talked about this earlier, but some cards will give you a different amount of points for different things, and I never know what the conversion rate is. Because it depends on card to card, right? It's like $1 equals a point, but not usually. It's like a penny equals a point or something. Nathan, I don't know if you know, but I have no idea.
Oh, I don't know.
Yeah.
I just like the word point.
It is, yeah, it's nice. And also rewards, mwah. Nice to know that I'm earning rewards for...
Oh, yeah. I love a reward. I love a point.
Yeah. So again, like I said, some cards will like basically if you want rewards, see what you're spending most of your money on and what you would use that card for, and then see if they like offer a bonus point boost thing for spending that type of thing. Basically, if you're only spending money on groceries, Grubhub, Seamless, whatever, takeout, you can charge that to that credit card. If that credit card gives you like 4 times the points for food, you'll earn 4 times the points as opposed to, and that's just free points, you know. Look at what you're spending money on and put it on that card. If you are responsible, because again, the most important thing, remember to pay your credit card each month, or at least have a card that has a low interest, because they will screw you
Yep.
They want to screw you. This is how they earn money.
It's the whole business model.
It's a whole business. It's a whole entire business of taking advantage of people that need or use a credit card irresponsibly, quote unquote. You know, if you do not think you can pay off your credit card debt, it's probably best to avoid it unless you really need a credit card, because you will owe an amount of money that makes it not worth it. Get yourself a low interest credit card. I'm like so fired up about this too, because I have a friend who's in a financial situation right now where she lost her job and has a bunch of kids, and she has to open a credit card, and she doesn't understand how credit cards work. And I keep being like, let me help you find options, because she's one of those situations where like she is just in a really bad situation, and she really does need a credit card, but she doesn't understand the pitfalls of it. So I'm like fired up about, I don't want her to have to owe more money at the end, you know, because she can't afford it. So just be careful and be aware of the terms. Here's the UK section for credit cards. I'm going to do this real fast. Nathan, I'm sorry, we're going to go over a bit. It's not going to be that much more, though.
That's okay. You warned me. You warned me ahead of time. I knew what I was getting into.
Okay, good.
I'm just hanging out.
Good.
I'm the reason. I'm the reason it's taking longer.
Oh no, the reason it's taking longer is because I decided to cover 4 countries.
I'm just here. We're having a good time.
We're having a good time. I'm trying to like be thorough and still like rush through. I'm sorry that this class is like a little fast, but I'm trying to pack as much in as possible.
I hope people appreciate it.
I hope so. I hope people are learning something, and I hope this is useful to people.
Yeah. I mean, if any individual part of this is useful to someone, then I think it was good.
True.
So, you know, different parts are going to be useful to different people. Yeah. And again, like we said, this is certainly not the end all be all of financial literacy. This is just like, you know, get you started and then hopefully send you in the right direction and consult with experts for your specific needs.
I just feel like I didn't know diddly about money.
Yeah.
Until recently, until I had to do accounting for the company, and then I was like, I wish I knew literally any of this, and that's on me partially. But
I mean,
that's also on the companies.
They don't really teach financial literacy, at least not in not when I was going through public education in America.
I had an economics
part
class.
Of America that I took economics. I mean, I took a finance class in college, but it wasn't like personal finance. It was like how to be a finance bro, the class. And I was like, this is not the job track for me.
No, God, I can't imagine you as a finance bro. Knowing what I know about finance bros.
Oh man. Anyway, but I digress.
UK credit cards. UK credit cards are like a weird beast, because the way that I double checked like most of these things is that I learned all of these terms and I learned all the rules, and then I googled like best credit cards UK or best credit cards Australia. Like I did this for each and every country, or like best bank accounts, best checking accounts, best savings accounts, best CD account, blah blah blah. I checked it for every single country, and then I would pull up like 3 different bank accounts or 3 different credit cards from each country, and then I would try to apply what I learned to what I was seeing on the website to see if what I learned made any sense. The UK has something called representative APR, and when I looked at the representative APR, I'm just gonna go to the next slide. I got to 88.8% APR, and I was like, that can't be the interest. That can't be how much you owe at the end of a billing cycle, because that's insane. What is that? Representative APR. And I don't fully have my head wrapped around this thing.
Mm-hmm.
Representative APR is how much they basically calculate representative APR based on how they think how they think you're going to use your card, plus the annual fee that you have to pay for said card, but it's not actually your interest rate. It's just like everything in total: purchasing power, pulling money from it, annual fee, but also it could be higher, but it could be lower. I don't fully understand it, and I will be 100% honest about it. But let me move on from representative APR for a second. Credit cards don't seem to be as good in the UK as in the US. The reward system isn't as good. Basically, the UK government was like, oh, Jesus Christ, everyone's putting their money on a credit card, and then they're not paying anything, and now we owe a bunch of money to all these companies. So they tried to scare people from using a lot of credit cards by making the interest rates higher, especially the minimum payments, like I mentioned earlier. So when you look at it, you're not going to see, like, if you look at like an American credit card, you're going to be like, oh, this credit card sounds great. And then you're going to pull it up in the UK and you're going to be like, this is bad. So just be aware of that. They're still good. They're not like great. But again, they're worse for you if you don't pay off the thing every billing cycle, it seems. Again, I'm not an expert. I spent a day Googling this UK thing, this UK credit cards. I literally spent a whole day looking at credit cards in the UK. So representative APR does not include bonuses or rewards. We're back on the representative APR. If you have a credit card with 21% interest, but no annual fee, and a credit limit of £1,200, your representative APR that will be listed on the website will be 21.9%. If you have a credit card with the same amount of interest, which is that 21%, but the annual fee is £195 a month, and the credit limit's the same as the other one, your representative APR on the website will be listed as 59.3%, which seems bananas.
Wait, is the annual fee? You said annual fee and then per month. Is it?
Oh, I'm sorry. The annual fee per year. You're right.
Yeah. Okay. Sorry. I was just
no.
Just double checking. Okay.
If you have an annual fee of 195 pounds, then it equals 59.3%. So what you actually want to look at is the specific interest rates. Like, if you are only going to use this credit card for sure just to buy things, you want to see what the purchasing rate is, plus like the annual fee, of course, of your credit card. But if you're going to use it to like withdraw money, you should look at the amount that's for that. Apparently the EU regulates the amount that cards can charge merchants. So the American Express card is the most common card in the EU because it has the most generous rewards. So yeah, I just thought I would throw that in. Because the next one, I have a breakdown of what it's like to look at a credit card when you're looking it up online. In the US, here's your annual fee. Here are the interest rates. So when you look at the interest rates, you'll have two different interest rates. So you can pull this up and it'll say this percent interest on purchase, this percent on cash advances. So if you use the credit card to take out money, it will be this percent. See, it's higher. It's 1% higher than purchases. But, again, it depends on your card. In the UK, it'll look like this. You'll have the representative APR. You'll see the credit limit. You'll see the annual fee. You'll see the purchasing rate. I pulled up like the rates on like the UK website. I couldn't find the rate breakdown on the US one, but on the UK one, it said like, again, here's the representative APR, which is 88.8%, but the monthly interest on money spent on purchases is 2.28%. If you have, again, that average balance gets taken over. If you don't pay it off for that year, you'll have to pay this. Cash advances is different. Balance / money transfers is different. So beware of that breakdown. Know what you want to use the card for before you start using that card.
Is it bad that all my brain can do when it sees like percentages like next to each other compared is think of getting gear in Diablo?
Yeah, I mean, I'm with you. It's like
Just
rate
like, okay,
of
crit chance, lucky hit chance, yeah, poison damage, damage over time.
Yep.
It's just my brain. It's just like,
I agree with you.
It's like, why we're not playing Diablo?
Those aren't.
This
doesn't give me a defense boost.
No, it's just much more important.
It'll affect your daily life more.
Yep.
Investing. I'm gonna roll through these really fast because this is like, to a lot of people, a lofty goal, right?
We're in overtime.
We are in overtime too.
But that's okay.
That's okay. Again, okay. It's relatively short, but
you got this. You got this, Julia. I'm here for it. I'm here for you. We're doing it. It's
like, you can earn a lot of money on investing, so I wanted to cover it. And also, like, if you open a retirement fund, you will need to know some investing because it gets most of them get invested into the stock market. We'll go over that in a second.
Stonks.
A interesting statistic I learned from the Financial Feminist podcast, which is that through over 100 years of stock market research, the odds of earning money in stocks over a day is 50%. So you can win, you can lose, whatever. And that doesn't mean it's like a huge amount. It can just be like slightly more, slightly less. The odds of earning money on stocks over a year, 68%. The odds of earning money on stocks from 10 years of investing is 100%. So you are 100% guaranteed, according to this stat, that you will earn money. That is not to say that at the 10-year mark, there won't be a market crash, because it's possible. But like, I'll go over it in a second, how recessions work and stuff like that. So the way you earn money on stock markets is that you buy a share at a lower price and you sell at a higher price. That's the very basic of it. Or you get dividends, which is that if a company you've invested in does really well, whatever the earnings are, they will, the board or whatever it is will decide how much of those profits to then divvy up, like what percentage of it to divvy up to their shareholders. Then those shareholders will get kind of like a pittance, but they'll get some money and then you can reinvest it or whatever. You basically earn money from dividends, and it's not usually that much. So I think these terms are the same amongst the English-speaking countries from what I saw. But a share is a small piece of a company. If you buy a share in a company and that company does well, your share goes up. So you can sell it for more than you bought it. If a share does poorly, the price of your share will go down. That's why when, for example, Elon bought Twitter, everyone got terrified because he's a freaking 14-year-old boy in a grown adult man's billionaire's body. And the price of Twitter went down because everyone was terrified that Twitter wouldn't earn as much money. So people just sold a bunch of stocks, which made it be worthless. Anyway, if you buy and share stocks, like day trading, it's high risk. You could lose a lot, but you can earn a lot. I don't know. I don't get involved in the day trading. It's too spooky for me. Bonds. You basically give money to a country or a company. Like you can buy U.S. bonds, right? If you're a U.S. citizen, I think is a rule. you will be paid a set amount at the end of the period when your bond matures, and the regular interest. It's usually lower risk than shares, but the trade-off is that the reward is potentially lower. Funds is basically just like a group of shares. It's usually less risky because when one company falls, there's usually enough success in the other ones to catch. I'll go over some funds in a moment. So here are types of investing. Individual stocks. That's like when you buy and share, with the shares, when you buy and sell shares. Again, usually considered the most risky. Mutual funds is a thing that pulls assets together from shareholders to invest in the stock market. It helps individuals access professionally curated portfolios based on their opinions. It usually has fees. It's not like based on anything other than like some guy being like, I think this is going to do well. I think these, however many companies are going to do well, you should buy this. And you're like, cool. And the thing that the guy who made this portfolio earns is money from you from the fee. So it's in their best interest to have it do well, supposedly. That's not to say that all of them are going to be good. That's based on your judgment. ETFs, which are exchange traded funds, it's a kind of mutual fund that is traded like stocks, and they can be bought and sold anytime. Index funds, this is a kind of mutual fund that is based off of like a certain like study basically of a market or like a financial market. So an example is the S&P 500, which tracks the top 500 companies in the country, in the US. It's generally considered low risk because, like, if one company dips, the other companies might come back up, because there's, with 500 of them, there's probably, enough diversified areas that, like, if medical stuff isn't doing well, then oil is, or whatever it is. Like, if one company falls, another one or enough of them are going up to catch that or to make up the difference, supposedly. That's like the general premise of it. Retirement accounts in the US, Social Security, that's not really like a retirement account that you have any control over, but it's basically like the government. It's a government program that replaces lost income for workers and their families. So 6.2% of your paycheck goes out to the government. And then when you retire, it gets paid out monthly and adjusted annually for inflation. Depends on your age, depends on how much you earned and how much you contributed in your highest earning 35 years. I don't know. It was like, in order to qualify for it, it like depends on a credit system. It's like every X amount, there was like a chunk of money. It was like every X amount you contributed earns you one credit. And then like, so every time you earn another of that amount, you earn another credit. And then go talk to someone who knows better about Social Security than me, because I didn't freaking understand it. 401k. I brought this up because it's like the most common when you work at a company. It's offered by employers. It's a retirement fund where you have your company take a portion of your paycheck out and put it into an account, which is then invested into the stock market in a way that you tell them to. So you can do you can do stocks, you can do index funds, you can do bonds, whatever. You set that yourself. But whatever is taken out of your paycheck usually gets matched up to a certain percentage by your company. So like if you have them take out $200 of your paycheck, your company will match that and also put $200. So that's $400 put into a 401k that you then get later. Yes. IRA. I got questions about IRA last time. There's a traditional IRA. It's opened by individuals through banks or brokers. So this is like one that you can open yourself if you don't work at a company. It typically has more investment options than a 401k. So again, you have control of like how you're going to invest that in the stock market, like stocks or index funds or mutual funds or whatever. it has some sort of like tax break in there, but when you pull that money out, you'll be taxed at the normal income rate that gets applied to however much you're pulling out, right? Also, your contribution limit is lower than a 401k. Pros and cons are there. I'm not going to go over each and every one of them, but because I basically just gave you the gist. A Roth IRA is different. It's like a traditional IRA, and the contribution limit is the same. Pulling money from this account later is tax-free. Again, pros and cons here. You can look into it. I just want you to be aware of these options so that you can go talk to someone about it. The main difference between a traditional IRA and a Roth IRA is that a traditional IRA is lower taxes today. Roth IRA is lower taxes in retirement. I went over this earlier. Another important thing.
If you expect to be in a higher tax bracket when you retire than you are now, doing the Roth IRA is good.
Oh yeah, that's a good point.
Yeah.
An important thing about stock markets that I think a lot of people are confused about. If the stock market crashes and you have stocks in it, no one's going to be asking you for money. You only lose money on that share if you sell it. So, like, if you buy a share of a company for $10 and the stock market crashes and suddenly your share is worth $2, it's not like you're going to owe $8. It's basically like, now it's probably advisable that you hold on to it until the stock market recovers and now it's worth what you originally paid for it or better. And then it's only, you only owe money and you only get money if you sell the thing. So basically, like, if you can afford to ride it out so that you don't lose money. Just wait for it to do better. The UK section of retirement, you have a pension system, or like you have a pension system. So the pension is a long-term investment account to help you save for retirement. It has tax-free perks. You have the state pension, which is something that you're automatically enrolled in when you start working. You contribute this, and then it's usually invested into stocks and bonds, like we said earlier. It's usually managed by a fund manager. You don't have like much control over this, I don't think. But it's sheltered from dividend, capital gains, and income tax once you retire and hit retirement age. You can get this money. Right now, I think it's 66. In like 2 years, I think, or next year, it's like the retirement age goes up. It's generally advised from those multiple articles I was reading that you don't try and live off of this because it doesn't pay that well. It's like Social Security, but not. It's almost like Social Security. It's like not try not to live off of this thing. You can also get a personal pension, which is a pension that you control. It's known as defined contribution or money purchase. It's a pension you manage yourself. You usually get paid out based on what gets put in and how the investments performed. Like investing in the stock market, it kind of gets you. Whenever you decide to pull the money, there are kinds of personal pensions like stakeholder pensions or self-invested personal pensions, SIPs, which usually allows you to control the specific investments that make your pension fund. Basically, it's like you can't control this, you can control this. So the benefit of being in here is like you win or lose depending on how well you controlled it. This is kind of like guaranteed. It's gonna be whatever. Continuing with the UK, you have individual savings accounts, which is a tax-free place to earn money that you put in. There's 4 kinds of ISA accounts, which is cash, stocks and shares, innovative finance, and lifetime. You won't owe tax on any interest or income/capital gains from investment earned on these. The cap is £20,000 in one type of account, or £4,000 in a lifetime ISA in a year. there's a lot of specifics here. If you're interested in learning more about one of these, go talk to a financial expert. There's also junior ISAs, which can be opened by like a parent or a grandparent for their grandkid or their kid. It basically is a way to like grow money tax free so that when that kid turns 18, they can access it. And it's just like, you know, money that's grown tax free. So it might be a good option for you. I don't know. Canada has so many types of retirement funds. You have the tax-free savings account. Again, I'm not going to go over like each and every one of these, I don't think, or else we'll be here forever. Unregistered investment accounts, registered retirement savings plan. It's like they have a lot of really catered to your situation retirement accounts that are controlled by the government. You can pause here if you want to read, and then you can Google it. I don't know much beyond what I've written here. Then here's the other one.
Canada.
Even more Canada.
Canada got a lot. Wow.
You like that this is like off center.
A lot of retirement plans, eh?
Eh? One that is good for parents to open for their kids is the registered education savings plan. It helps with education. America has an equivalent of this, which is like what's it called? 525 or something? I don't know.
Oh, yeah.
Yeah.
It's what's it called? I think you're right.
It's like 520 something. But it's like an education fund where basically you can put money into it and then it grows. And then if they use it for tuition or school expenses, then I don't know, it's like better, whatever. And then if you take it out for not education, then it's worse.
529.
I was off by 4. You can open a version of this for yourself, which is called a general education savings. You can open one of these if you have a RESP, which is that registered education savings plan that we talked about earlier, and want something in addition to that. Like if you've maxed out that other one, now you want something else to help with that. There's also one for if you have a disability, there's a savings plan. And I think it's like an amount will be doled out, but I don't know. Australia has a whole different retirement system, and I found it fascinating. It's called superannuation. But it's basically your pension/retirement savings system. But like when you work for a company, that company, a percentage of whatever you make gets put aside, or like they will pay, let me restart. A percentage of whatever you make, they will put that percentage of whatever you make, let's say it's 11% of whatever you make equals $1,000, whatever, I'm pulling money out of my butt. That $1,000 will not be pulled from your paycheck, but will be paid in addition to your paycheck into this pension fund. But I don't know, I thought that was interesting because it like doesn't get taken out like Social Security does or the UK pension, whatever. So you can apparently contribute to this, and if you move, apparently you can take this with you. Like if you move out of Australia forever, you can take this with you. The government age pension, which is basically the government gives you money that it earned from tax revenue, so you don't have to add anything to it. It's not like Social Security in that way, where you're not like paying for this thing. It's just like government age pension. It's like, I don't know, it was very cool. I liked it. I'm gonna move on because I didn't fully understand it. We're gonna get, these are all very quick now. We're almost at the end, I promise.
All right. Yeah.
I want to go over how recessions. Yeah. I want to go over recessions because they're scary, and I feel like when I was a kid and I heard recessions and people talked about recessions, I was like, basically, if you get into a recession, that's it forever, and you melt into the floor. You become one with the earth, because it's over for you. But recessions happen when there's too much defaulted debt or bankruptcies that capsize the economy. So like too many people, like the housing bubble. The housing bubble is like one of them. Like people just couldn't pay for things, and they declared bankruptcy, and then the government had to like pay off all these debts. There's the asset bubble, which is when people buy too much of a stock, and then the second the market dips, everyone just like sells, and then there's like panic. If inflation is too high or inflation is too low, it's like we can't control it, and we just got to ride it out. We can't 100% predict when a recession is going to happen, though a lot of newspapers will try to tell you they know exactly when a recession is going to happen, but it's because they want you to go to their thing that's like, a recession is going to happen. Here's the information you need to know. You click that article, and it's like, here's another article on, they're like, hey, a recession is going to happen. You should do this thing. In order to find out about this thing, go to this other article that tells you about this thing. It's basically like to just get you to keep rolling through their website and just like get you more and more built up into a fervor, right?
Clickabait.
Yep, it is clickbait.
Clickadabait.
Clickadabait. So, just, it's one of those things where you should be aware of the news, but don't get overwhelmed by it, because they make money off of you being terrified all the time.
Yeah.
They want to present you the worst scenario and say that they're the ones that have the solution. So you go onto their website. Anyway, it's awful.
Keeps your eyes glued to the screen, baby.
Yep. Remember to unplug sometimes.
Yep.
I wanted to talk about depressions versus recessions. Depressions happen when unemployment rates skyrocket and GDP falls. GDP is like the amount that your
gross domestic product.
Thank you. Gross domestic product. In the Great Depression, the unemployment rate was 25% and GDP fell by 30%. The closest we've gotten since then in America is unemployment rate being at 10% and it lasting 18 months. That should put into perspective the Great Depression, because also that was years.
Yep.
Of having a huge amount of unemployment and a really low GDP. So the likelihood that we're going to be in a depression again like that is, I don't know. I bring this up as like a good thing. Like, recessions suck, but at least we're probably never going to be in this bad of a depression again. Hopefully. So I also wanted to bring up the 4 recessions that have happened in the past 30 years to kind of put them into perspective. Gulf War recession lasted 1 year, and it's from spiking oil prices. The dot-com recession, it lasted a couple of months, and it's from a lot of problems that got exacerbated by the tech bubble crash and the Enron scandal, which made a lot of people very scared. Then there's a Great Recession, which is like the worst recession we've had since the Great Depression in America, which it lasted a little under 2 years. Again, it's 18 months. Yeah. And it was caused by the real estate market crashing, called the Great because it was our longest recession ever, excluding the Depression.
Just right when I started college.
Oh, yeah.
This is just like, hey, job prospects.
They're real bad.
Glad I'm not graduating right now, but geez.
Yeah, and it lasted 18 months.
Oh man.
Which sucks, but it's not forever, you know. COVID-19 recession technically lasted 2 months, which is the shortest recession we've had. How it'll affect you might lose your job because companies will try to save money, and instead of cutting their CEO bonuses at the end of the month that are several $100 million, they'll get rid of a bunch of the people lowest in the company. It's great. I love it. It's awesome. I love CEOs. All CEOs
I've never met a bad CEO, not even once.
Not even once.
All CEOs
They
are
really
awesome.
they really know what they're doing and they know what they're talking about. And they really when you meet one and hear them talk, you're like, wow, it's really a meritocracy.
Yep. And then you're like, I'm gonna work for you. It's gonna
Yep.
be great. And
Glad
not a
my
mistake.
labor is making you richer.
Yep.
It's good.
I'm glad that you have $1 bajillion because you showed up to a meeting once.
You earned it.
You definitely
Congrats.
earned it. This is awful.
Woo!
I love CEOs. They're great.
Love CEOs here at Drawfee. Don't let anyone tell you we don't.
Yep, we love them all.
Mm.
Never met a single bad one. Anyway, benefits and wages.
Anyway.
Your benefits and wages. This is me and Nathan going on a side tangent. Benefits and wages might get cut, which sucks. Bless you. Olive just sneezed. If you have investments in the stock market and you wanted to sell them in the short term, they'll be worth less than before, probably. But also that means the stock market crashes and you have the money for it. You could buy stocks real low, so that when the market recovers, you could probably sell them higher. Again, use your judgment. Mortgages, car loans, etc., they might not give them out as easily as before because they're worried that people aren't going to be able to pay for them because so many people will be applying for them because they'll need financial help because they either lost their job because CEOs are just little guys like you and me and they need their several $100 million.
Oh, we can't afford to employ you and have our big bonus. Oh no.
They're just like you and me, CEOs.
Help us out.
You need to lose your job so I can keep my yacht. Anyway. We love CEOs here. Mm-hmm. Basically what I'm trying to get at is that recessions, yes, they suck and they're hard and you'll need to like hold on for a while, especially if you lose your job. It's like it'll be a rough period of time. But what I'm trying to say is that they end. They end and there are options and you can recover from them. It's rough, but you can do it. I wanted to talk about pricing your work. I went over this in the other class, so I won't get too into it, but there are some tools for you. We work with someone who gives us advice, basically. When I don't know what I'm doing, I ask him, and he explains it to me, and I go, yes, I understand. And usually I don't understand. But, we make it work.
You understand better than I do. Which is a low bar to clear, but
I'm learning trial by fire every month. Something new pops up, and I gotta learn. But
kept us going for over 3 years now, Julia. So,
yay!
That's pretty good.
I've done it.
You've done it.
George says so. George has like this tool. It's basically like a doc to help you calculate how much you should be pricing your work. Price things according to what they cost you. Not what other people are charging. So how long does it take you to make a piece? Make sure you're charging a minimum of $15 per hour because 1/3 of that is going to be taken out from taxes. That's another thing that I should mention, that in the US, if you are self-employed or you earn like a bonus that isn't taxed or something, you should probably set up at least 1/3 of that. You should set aside that amount because that will be the amount of money that's taken from that bonus or from those paychecks. It's more or less depending on where you are. If you're in like the New York City area, you will be charged much higher than other places. New York City has some of the highest self-employment rates in the country. But it's usually never more than 1/3 of that pre-taxed stuff. So you should set that stuff aside. Know that you can't touch that because the government's going to take that. Of course, if you are just earning wages and your company takes out taxes, that's usually the most you'll have to owe. I don't think you'll have to owe anything at the end of the year, depending on your situation. Anyway, you can pause it here.
George says what has to be said.
Thank you,
And
George.
really quickly, I want to go over some resources I found for when you are low on money, because there's no shame in being low on funds. It happens to people, especially when there's something outside of your control. You know, like an emergency, or your health is bad, or you couldn't work. Sometimes things just snowball. So you shouldn't feel shame about it. In the US, the bajillionaires want you to feel shame. And that is the biggest trick they ever pulled on America. So, accepting help is not a weakness. There's no shame in it. Everyone needs help sometimes. So, just know where to find it. One of those places is libraries. I got to talk about libraries again because I love libraries. My family relied on libraries so much when I was a kid. It was basically the only way that we found deaf education or deaf resources for me at all. I never had deaf education, but when I got my hearing surgery, it's where we found my speech therapist, and she did a great job. So, and also librarians have a lot of skills under the belt that can help you. Depends on your library, but libraries have free Wi-Fi 24/7. It's indoors, and usually that stuff goes outdoors, so you can work from your car, but be safe. Cheap printing / photocopying, because none of us have a printer anymore, for the most part. Many of them partner with local governments, nonprofits, businesses, etc. So if you need a resource or you need help with something, librarians can usually point you in the correct direction. Again, you can find out most of what your library offers by going online and checking your library. But this is all just like to get you interested enough to go see, because you already pay for libraries. Just go there. You pay for it. It's free. It's free now because you paid for it before in your taxes. They have more than ebooks. I mean, they have more than just books. They have ebooks, which you can get through the app Libby. That can save you a lot of money on like entertainment, stuff like that. It's a really great system. But they also have movies and TV shows for streaming. I just learned about this, but this is fascinating. They have a language app, or there's a language app called Mango. And if you connect your library card to it, it's completely free. And they have 71 languages. And apparently it's a really good learning system. So if you want to learn, but you don't want to pay money for it, and you want to learn through an app, that might be the way to do it. They have tons of classes and cultural events. Mine has like where you can learn knitting and sewing for free. And they do it every week. And there's just like a lot of ladies that are very excited to teach you about knitting and sewing. But some libraries in Brooklyn have like an English as a second language course for free. It's awesome. I haven't gone there, but I don't know. I heard they're good. They also have free equipment. So your library, your local library might have streaming equipment. Like, again, a lot of Brooklyn libraries have cameras and webcams and lights and things like that. They have things that you can borrow for like the day, even like bigger equipment, like bigger cameras and things like that. I know that in Colorado, in like the snowy parts, a lot of them have skiing equipment, which is great. Like they'll just have like sports equipment. It's awesome. Go check it out. It's great. They have so many more things. They have free sewing equipment that you can just borrow. They can also help you with like programs. I know a lot of librarians can help you learn Excel, which would be great, or like Google Sheets, which is great for keeping track of your money stuff. And some libraries have librarians and special programs and special times that can help you with your cover letters or your resumes or your tax paperwork and stuff like that. So they can help you there. So here's healthcare. There's resources to help you if you need help with healthcare. You can Google local assistance for health insurance application. Healthcare.gov can help you. It can get you in touch with local organizations. Medicaid. George notes that a lot of artists are likely making below the poverty line, so you can probably get Medicaid. New York Department of Labor can help you find a job and can help you with unemployment insurance benefits. I've had to talk to the Department of Labor, and I've had to talk to the New York State of Health, and they've been very friendly and very helpful. They can't like tell you exactly what to do, because then there might be some corruption there. Sorry, my cat's doing something weird. But yes, George also notes about lawyers is that a lot of states have programs where accountants or lawyers will offer pro bono consult meetings on issues. My cat's going bananas again.
All right.
Scratching the post. So you can search lawyers for the arts in your state. There's also a national directory of volunteer lawyers for the arts, which is you can get it on this website. George also writes that for accountants, there's also an organization that help connect freelancers to CPAs, again at reduced rates and a sliding scale, like these. So you can look these up. Food instability. I promise I'm almost done. There's a lot of food pantries / food banks. A lot of them don't ask you to prove how much you earn. So don't feel like, I don't know, if you can't afford food, just go. I volunteered at a food bank. It was at a church, and they never asked anyone a single question. They didn't ask how much you made. They didn't ask what religion you are. If you showed up, you filled out the card of things you wanted, and then they gave you the things. And they had it like once a week, and it was enough to like get people by for the week. It was pretty good. I volunteered there for years, and I don't know, they were great. They were pretty cool. Yeah, so you can just Google like food banks in your area, and then they usually will have their own website for if they do have any rules. Like they'll have like the days of distribution, the hours, if there are any requirements, things like that. Some food banks that are national, like Feeding America, and they have a Feeding America food bank finder on their website. There's also feedingnys.org, which has most, if not all, food banks. It has like a search for that in New York. You can search by county. I bet that every state probably has something like this. There's also government assistance. There's SNAP. My family was on SNAP for a while, and I think we were on WIC for a while. But basically, they are like, SNAP is like a card that has like money that can be used on foods, like certain foods, and you can go to a store that accepts the SNAP card, and it's not all food, like grocery stores that will accept it, but you have to like look on the website. There's the WIC is more than just food. It's supplemental foods, healthcare referrals, and nutritional education for low-income pregnant, breastfeeding, or non-breastfeeding postpartum women to infants and children up to the age of 5 who can be found at nutritional risk. Each state has their own requirements, so go to the USDA.gov website to see what yours is. In the UK, I never finished this sentence. Anyway, you have Feeding Britain and the Trussell Trust, and you have a whole ton of others. Local churches and things like that will have food banks, of course, in addition to all these things. You don't really have an equivalent to the SNAP or WIC, but you have like financial help if you're in dire straits. There's like programs you can apply for and things like that. Here are some of the financial programs, like Universal Credit, which is just like they'll just give you money if you hit these things. There's also the Job Seekers Allowance, Employment and Support Allowance, Carers Allowance, Pension Credit. Again, you can read the rules here if you want, or if you need any of these help, any of this any of these programs. I can't speak anymore. Canadian section.
You've been talking for a while.
I've been talking for a while.
I think you're doing great.
Thanks, man. Canada has Food Banks Canada, Second Harvest, Community Food Centers Canada, and Salvation Army. They have a number and email address you can use to request. So like each one of them, I think each one of them has like a phone number you can call, or you can email them if you are in need of help. There's also Breakfast Club Canada, which provides food, cooking classes, kitchen equipment, and training across the country. If you need housing, financial disability, and additional benefits can be found through the Canada government website. Full thing written out here. Also, if you are an Indigenous person living in an Indigenous community or from an Indigenous tribe, I believe, I don't think you have to be actively living there. But there's a number of resources you can go there. Australia, you got Food Bank. It's just called Food Bank. You got Oz Harvest and Second Bite. But basically they are tools to help you find food banks in your area if you need them. Second Bite can help you get meals if you're a university student, or they'll help you find like a resource near you. The National Debt Helpline I found had a lot of resources. There were like so many links on that thing. But they can help you with food, housing, and bills, or emotional support. There's a whole list of resources at this thing, which is moneysmart.gov.au/managing-debt/urgent-help-with-money. And there were a ton of things on that. That's it. I think that's everything. I hope that wasn't too fast for everything. I tried to cover it as fast as possible, but everything I was speaking about, I basically wrote on the page. So, I hope that was a good class. And I hope that was helpful. My cat is screaming. I don't know if you can hear her, but
I cannot. But okay, maybe that's Zoom is protecting me.
It might be. Also, Jacob has like a noise gate on his Rodecaster. Anyway, I hope that was a helpful class. I hope that I explained things well enough so that people can go in and search things themselves, or have a starting point to then go talk to a financial analyst or like a person at the bank, or whatever, to help point them in the correct direction. But anyway, yeah, I hope that was a good enough starting point for people. But that's it. That's all just stuff I wish I knew before I became 30.
That's all the money stuff. Yeah.
That's it. Nathan, thank you for being here.
You're welcome.
We have new merch on the website, on the DFTBA site.
Yeah.
I'm gonna go not talk for the rest of the night.
Yeah. Take a break.
That's it.
I'm talking. All right.
Thank you everyone for being here. Thank you for being a patron.
Yeah.
We'll see you next time.
Yep.
Bye.
Bye.